Hey everyone, welcome back to another How To with Ziad and Mia. As you can see, we're not in the studio right now. We are working from home, but we want to make sure that we're still pushing out content for you as we do every week. And if you've been liking it, then please hit the like on this video and subscribe to our YouTube channel. You can also follow us on all of our other social media, and that's how you can ask us questions if you have any questions after this video, or if you have any suggestions for videos in the future. So as always, everything that we'll be talking about should not be taken as personal advice. If you have questions about your situation, please ask your financial advisor. But with that, we are going to be talking about important December deadlines today. So this is going to be everything to do with your financials that you should get in line before the end of the year and before we start those New Year's resolutions.
That's right, the show must go on. Really excited for this episode. With the holiday season coming up, many people are starting to focus on just cozying down for the holidays, and a lot of people tend to push off these financial conversations until the start of the new year. But what we want to do is we want to highlight some very important deadlines to keep in mind to make sure that you're maximizing your financial situation.
Let's kick it off with a little bit about medical and insurance coverage. Now, open enrollment for Medicare, which is the federal health insurance for seniors and individuals with disabilities, has already passed. That date was on December 7th. That was on Monday. Open enrollment is still open for the Affordable Care Act and is going on until December 15th. So you have until the 15th to get coverage. Another option that some individuals choose to go with are FSAs, or flexible savings accounts. Now, you have to use them by the end of the year. It's this use it or lose it policy, which is why we put it on the deadlines list. Because this is a special account that you put money into to use for certain out-of-pocket medical care expenses down the line. And you don't pay taxes on this money. So you pull this out tax-free when you're using it on medical expenses and on childcare costs, for example. Now, there have been some additions, and you can take out tax-free withdrawals for over-the-counter drugs and for menstrual supplies.
Now, while you want to make sure that you're spending out of your flexible savings account, you want to make sure you're contributing into your health savings account, or your HSA. This is an account that we covered in a previous episode. It's a great way to save for retirement while also being able to pay for health expenses along the way. You get that triple threat, right? You get the tax deductions when you contribute, tax deferred growth throughout, and if you're spending on the right things or keep it long enough, you'll also get tax-free withdrawals. This is huge. It's the only account that really allows this. A couple things to note. You have to make your contributions for 2020 by December 31st. So that's only a few weeks away. And you can only qualify for contributing into a health savings account, or HSA, if you have a high deductible health plan. So if you don't worry about it. If you do, open that up right away and contribute. As an individual, you can contribute up to $3,550, and as a family, that's $7,100. So make sure you get that started. Played your cards right, you're probably ending the year with a lot of gains in your portfolio, which is great. Everyone wants to end the year with as much profit as possible, but if you can, you want to make sure that you're minimizing your taxes as well. One of the easiest ways of doing this is by selling and realizing the losses in your portfolio. Basically, what you can do is you sell an investment that's at a loss, realize that capital loss, and you can use that to write off against any kind of capital gains that you've realized for the year. It's a strategy that we as advisors employ often, called tax loss harvesting, something we've also talked about in a previous episode. It's really important, though, that you keep this deadline in mind, that you have to be selling this investment before the end of 2020. Beyond that, also, if you do sell that investment and realize that loss, you can't buy back the same investment until after 30 days. Otherwise, it'll be considered what's called a wash sale and won't count towards mitigating any kind of realized gains. Make sure, if you are, to check your portfolio, see if you have any positions at a loss, sell them, and use that to offset any gains that you have for the year.
Now, if you're going to be contributing to an employee-sponsored retirement plan, that's your 401ks, your HSAs, and your Roth 401ks, you have to make your contributions before December 31st. Another one is your charitable contributions for a tax deduction. These usually only apply to taxpayers who itemize their deductions, but this year, under the CARES Act, it's available to those who take standard deductions, but those need to happen before December 31st as well.
one of the things that we talk to a lot of clients about is what's called the gift tax exemption. Every year, you as an individual can contribute or gift up to $15,000 to a single person without having to deal with any gift tax consequences. Now, while if you do contribute or gift over that $15,000, you don't necessarily have to pay taxes on it. It'll simply eat into what's called your lifetime gift tax exemption. For a single person, that's $11.5 million roughly, which means that as a couple, your gift tax exemption for your life is about $23 million. So for most people, it isn't really a big deal. But if you do have a large estate that you do plan on passing down, make sure that you're maximizing this gift tax exemption every year to keep yourself efficient. Another thing that is specific towards 2020 is withdrawing your funds from your 401k or your IRA through the CARES Act. In order to make things easier for people who have been going through some tough economic times, tough financial times this year, the CARES Act is allowing people to withdraw up to $100,000 of their 401k or their IRA without having to take on the tax penalty. Not only that, you can pay yourself back into your retirement accounts over the span of the next 3 years. If you don't, all you have to do is pay ordinary income taxes and you don't get that 10% penalty. But if you are going to be withdrawing in regards to the CARES Act, you have to do it while it is 2020. The minute January 1st, 2021 comes around, that CARES Act benefit goes away. One thing that isn't happening in 2020 but happens in most years is having to take out required minimum distributions or RMDs. Now, this is for if you have a traditional IRA or a 401k. If you are 70 and a half before the beginning of 2020, or you're turning 72 this year, you generally would have to take out what's called a required minimum distribution. Now, this year you don't have to, but next year, beware that come December 31st, you will have to make sure that you're pulling out the required amount of funds from your retirement accounts. That's right, it's very easy to sit back and relax, cozy up for the holidays and wait until 2021 starts. But make sure that you are taking the time to look at these deadlines and see if anything applies to you, to be making sure that you maximize your situation.
As always, if you have any questions, please feel free to DM us on any of our social media accounts or drop a comment on our YouTube video and we will make sure to respond to you. Please reach out to us if you have suggestions for upcoming episodes. We really want to cater this series to you.
If you are looking to review this with a professional, reach out to us. You can find us in our office, 310-441-9393.
And we hope to see you here next week.
Have a great week.